Hey everyone, Coach Investor back with the third video of the evening session. We already covered Teladoc, not great. Nvidia, as good as it can get, best in class. Of course, valuation matters, so that's the question that everybody has to ask for himself. Do you want to pay the premium for this business? Go watch that video. In this video, we're going to have a look at Unity. At the time of making this video, the stock is down around 6 to 7% or so. Yes, on a non-GAAP basis, this was the first profitable quarter, let's say, but we're going to have a look and see why it's not really the case. Yes, it's the case because accounting rules, etc. But if you exclude stock-based compensation, the story is completely different. We're going to have a look at why. Well, suddenly ironSource is basically saving this company a little bit. All of that in this video. If you like this type of videos, leave it a thumbs up. Subscribe if you have not. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So they start off with the highlights here. So record revenue of $1.39 billion for the full year 2022. Q4 2022 is the first profitable quarter as a public company on a non-GAAP basis. Very important that they mention this. They exceeded revenue guidance in Q4 2022. Okay, fine. So let's scroll down and see. So we're starting off with the financial overview. Of course, there's a big increase in total revenue year over year. They are including already ironSource in Q4 calculations. Then non-GAAP income from operations, as they said, this is a positive one, $13 million. But overall, loss from operations, if you scroll down, maybe you'll see a bit better. Fiscal year 2022 was still negative $882 million. So they still have a lot of work to do when it comes to the profitability of the business, the real profitability of the business. Then when it comes to Q4 results, Create Solutions was $198 million, Grow Solutions $253 million. If you're not familiar with the new name, well, that's because it is a new name. We're going to have a talk about that in just a second. Total revenue was $451 million. Guidance was between $425 and $445 million. Also, one of the reasons why the stock is down after hours is because of weak guidance. Below expectations and not by a little. So continuing here, non-GAAP operating income, as they said, $13 million. They expected to be between $5 and $15 million. Non-GAAP operating margin, just 3%, again, within that guidance, but here, high point of the guidance. Then, continuing here. So, going forward, Create Solutions will include all products that were included in Create Solutions in 2022, plus Unity Gaming Services, which was previously reported under Operate, and Strategic Partnerships, which was previously reported separately. Now, Grow Solutions will include their ads product, Supersonic, Aura, and Luna. And so, when we scroll down, we can see now the new representation here. But what I feel is a bit more interesting is the Grow Solutions. So they say here the year was impacted by portfolio and executional gaps, which are now behind us, and a challenging economic environment. The Unity and ironSource merger transforms our business with best-of-breed offerings in publishing, which is Supersonic, mediation, Level Play, ad networks, Unity and ironSource, marketing platform Luna, and device management Aura, and the creation of a leading end-to-end platform that we expect will help creators be more successful. Now, here, difference is already, well, pretty visible. The prior structure, this means that in fiscal year 2022, this grew 13% to $801 million. Now, with the current reporting structure, this only grew 12% to $675 million. But there is more. So, during the fourth quarter of 2022, they bought 42.7 million shares back at an average price of $35.1 per share. With that buyback, we returned $1.5 billion to shareholders as part of our $2.5 billion share buyback program. We closed 2022 with $1.6 billion in cash, cash equivalents, and short-term investments. So they still have enough cash here to survive. Now, with regards to guidance, they expect total revenue to be between $470 and $480 million. Expectations were above $500 million. Now, as for adjusted EBITDA, that will be between $7 to $12 million, and adjusted EBITDA margin still 1 to 3%. For the full year, between $2.05 and $2.2 billion. adjusted EBITDA of $230 to $300 million, and the adjusted EBITDA margin to come in between 11 and 14%. Now, I do want to show you something very, very interesting and, well, something that should really blow your mind. So, first of all, GAAP loss from operation was $273.76 million. Stock-based compensation expense was $173.9 million. Then, of course, if you scroll down, you can see that non-GAAP income from operations is positive $13.3 million, as they said before. Now, of course, if you take away stock-based compensation, this number will never reach the positive point. So, yes, this is the way accounting is today. There's really nothing we can say about this, but yes, it is profitable officially, but let's be honest, stock-based compensation is not really why we want to see this business being profitable. And then I'll continue here. When it comes to the customer metrics, so $100,000 customers and the net dollar expansion rate, of course, dollar-based net expansion rate has been coming down for a while actually. And then the customers that are spending more than $100,000 is going up right now. But there is a catch. They say here, our key customer metrics improved this quarter enabled by ironSource integration. We closed the quarter with 1,340 customers with trailing 12 months revenue above $100,000 and a base dollar net expansion rate of 116%. And here it comes. For perspective, our performance excluding ironSource would have been 1,056 customers with a trailing 12-month revenue above 100,000 and a base dollar net expansion rate of 109%, which means we would have seen another decrease quarter over quarter when it comes to dollar-based net expansion rate, and with regards to the amount of customers that generate over 100K in revenue in the trailing 12 months, you would be actually flat, let's say, year over year, but down quarter over quarter. So to me, it's pretty simple. Was this a good quarter? No. Was the guidance good? No. Twice no, actually. Now, with regards to the so-called non-GAAP profitable quarter, to me, that's a non-story here, right? I don't care about this right now. I want to see the business, everything that they've said. I want to see execution, which is something I have not seen here. And when it comes to profitability of the business, I don't remember which quarter it was. They were suddenly talking about being profitable. Well, right now, there's really no signs of the actual business being profitable. Far from it, actually. If you look at stock-based compensation, if you look at expenses, they're not decreasing, they're actually increasing. Of course, they acquired companies, they merge, etc. It takes time. But communicate, write it down. Don't say, oh, we are performing well, we're attracting customers, we're doing this and that, we have Black Panther award nominees, etc. that use our technology. Fine. But since you're a publicly traded company, since you have investors, why aren't you showing how you're going to execute better in this market? I'll give you an example for Fiverr, right? We've covered this company yesterday. The company said it themselves. They will not be growing at all costs. They're still growing, but they're also focusing a lot on profitability. And they showed it, right? The business is becoming more profitable. They're still growing, but since right now it's difficult to grow very, very fast because it doesn't really make sense to spend a lot, then at least we've seen on the other side, the profitability side, that is becoming much better. With Unity right now, I don't see anything happening, right? There's no extreme growth and there's no extreme profitability. So what's going to happen here? Right now, I still hold my shares. To be honest, I don't know if I'll hold my shares for another quarter. Still have to listen again to the earnings call. Let's wait and see. I'll for sure update you before I make any moves, but do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.